watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. Thanks so much for watching. Just ahead on First Business, a seasoned trader explains why he's going month to month with his investment strategy during this time of the year. In today's cover story, doing the math, the shocking out-of-pocket expenses teachers pay for school supplies, plus cartoon characters, why some say Hollywood is overly ambitious with animation, and tourists flock to Florida as a roadside attraction from the 40s takes center stage. We are tapping into the trader mind this morning of Scott Bauer of Trading Advantage. Hello, Scott.
Hello, good morning.
You are sharing with us your top trading tips, starting with don't be a hero. Why not?
Because you're going to fail more often than not. Bottom line, when you go into a trade in the marketplace, and I don't care if it's in commodities, stocks, equities, options, whatever it is, you need to have a set plan. And that set plan should not be trying to hit a home run, because you may hit a home run 1 out of every 10 times, but strike out the other 9 times. So go in with a plan. Go in with realistic profit expectations. And when things don't work out, don't ride it out. Exit your strategy and go into the next plan, because you know what? There's always another trade to make.
You also say don't pile on. I think of this as following the herd mentality. Why does that not work?
Here's a great example. You know, we saw Abercrombie earnings and the stock was down 20% on real high volume. Well, don't get into a stock like that has moved just on huge volume and a significant move the day or even the day after of the move. Let things shake out, okay? If you see from a technical or a fundamental standpoint that may be a good opportunity to buy or sell at that new price, that's great, but you need to let the market shake itself out, see where it settles in, and then make your decision.
And your last tip is extremely critical. You say stay nimble.
Right, and what I mean by that, Angie, is when you have your preset plan, you know, you need to act on it. You need to be ready to enter, to exit a trade right where you perceive, you know, that market's going to be or what your plan is. So you want to stay active. Don't try and stick with something too long. Don't try and have this plan, and if it doesn't work out, let it ride. Be nimble, be able to get in and out, stay with more liquid equities, more liquid commodities. You'll be better off.
Scott, thank you so much for sharing your thoughts today. Much appreciated.
My pleasure.
In today's cover story, public school teachers spent $3.2 billion on school supplies last year. Half of that, $1.6 billion, out of their own pockets. Now there's an effort to make the public aware of all the materials teachers themselves provide while on the job. In 6 years of teaching, Belinda Carucci spent more than $21,000 out of pocket on books, chalk, and other supplies for her students. 16 years ago, she decided to open the Chicago Teacher Store and hired other teachers to run it with her because of what all teachers know. They pay for a lot of what they use in class out of their own pockets.
The first couple years of teaching, you spend because you're trying to build your classroom.
Teachers paying out of pocket is nothing new, but the amounts are getting higher. In 2005, the average was $552 a year. Now, the National School Supply and Equipment Association, a trade group, says that the average public K-12 teacher spends more than $1,000 a year.
For me personally, this year will be a big out-of-pocket year because I'm changing grades from a fifth grade to a second grade classroom. So the difference in that will be more than when I taught fifth grade 2 years in a row.
A survey by online coupon site RetailMeNot.com found 87% of teachers reach into their own pockets to pay for classroom expenses. More of them from urban districts and more of them in the western U.S.
We are a coupon site. We're in the business to help people save. So we're really aiming towards the consumer to try to help educate people to shop more wisely.
But there's more to it than encouraging coupon use. It has to do with priorities. The Nonpartisan Center on Budget and Policy Priorities found school funding in 35 states last year were below 2008 levels.
My hope is as we come out of the recession that we will see a slight improvement. So that's what I'm hoping for, but I can't guarantee it.
The Retail May Not survey also found nearly 9 out of 10 teachers say they've led fundraising efforts to help offset the expense of paying for classroom school supplies.
A punk rocker who's been around since the days of Dick Clark's Bandstand is offering a few of his best notes to entrepreneurs. Martin Atkins, who played with Public Image, stopped by our show to share his secrets to success. His advice to young people starting up in the music industry: email addresses are as valuable as cash and the best way to build a fan base. He says you can get those emails by giving away free items. He also suggests don't give away rights to your songs. You don't need a record label. And he says that Jay-Z and Taylor Swift have marketing styles worth studying. But mainly Atkins believes persistence pays off.
That's that punk rock DIY do-it-yourself mindset of what's stopping me? Nothing's stopping anybody from doing anything. You just have to do it and fix and correct as you go.
Martin Atkins currently serves as chairman of the music department at the SAE Institute, a media education school.
As the country transitions to the new healthcare system, physicians and hospitals are implementing new medical codes for diagnosis. Medical coders are at high demand. There's a shortage of 3 to 4 million workers. Starting salaries are between $50,000 and $60,000 a year. Ira Shapiro of CodeSmart says the jobs could be ideal for veterans or nurses.
Nurses who may already have some clinical expertise that want to transition to out of the operating room or to be on their feet all day. So, for many, many different types of people.
Shapiro says clinical documentation specialists are also in demand, as many offices have still not made the change to electronic medical records.
As healthcare enrollment gets underway, con artists are taking advantage of the new rules for financial gain. The Better Business Bureau says scammers posing as federal representatives are conning people into giving personal bank and credit card information in order to qualify for Obamacare.
The calls are increasing now, not only locally but nationally in scope. And again, the number of victims, we don't have the number of victims, but it's obviously the hundreds recently from the BB Chicago. And I can only imagine across the country, it's got to be in the thousands of consumers have been victimized.
The official website for The Real Deal on healthcare reform is healthcare.gov. The site includes information on how to enroll and how not to get ripped off.
As business travel rebounds, entrepreneurs have launched a new website. It's called Rocket Miles. It's a hotel booking website, but for customers, the draw is how many and how quickly frequent flyer miles may be acquired by booking through Rocket Miles. The company buys the miles from a growing list of airlines, then uses the miles as rewards for customers who book hotel rooms through Rocket Miles' website.
I could see the business traveler using it a lot, and I could see the leisure traveler who's trying to top off their accounts, who don't either travel a lot or don't have a venue to accrue miles.
In its first round of fundraising, Rocket Miles raised $2 million in external funding and started with 6 airlines and hotels in about 30 cities. The startup has added employees and expanded into overseas territory.
A unique roadside attraction that's been around for decades came close to sinking. Jackie Keenan reports on the lifeline Florida's government is throwing out to rescue a slice of Americana.
Welcome. We're glad you came to WikiWatchy.
The curtains rise, little girls sit breathless, and behind the glass, mermaids dance. This is WikiWatchy, an historic Florida roadside attraction. Located 40 miles north of Tampa, the park sits on crystal clear springs. And under the springs, mermaids give quite the show.
We were probably the quintessential roadside attraction. A gentleman by the name of Newton Perry had this idea of taking synchronized swimming underwater. And that was his vision, is to just take that on the surface and put it underwater. And that's how the whole concept of the WikiWatchy Mermaids began.
It began in 1947, and by the 60s, when visitors flocked to Florida for beaches and sunshine, WikiWatchy Mermaids performed for nearly 1 million visitors every year.
Deeper and deeper.
But soon after, attendance took a deep dive. In the early 70s, Mickey Mouse became more popular than mermaids, and tourists stayed put in Orlando. WikiWatchy shuffled owners and eventually fell into disrepair. Early in the last decade, attendance averaged only 160,000 per year. But today, mermaids are smiling again. More and more visitors are discovering WikiWatchy every year, and for that, the park has the state of Florida to thank. In 2007, when investors didn't want to sink any more money into the attraction, the state stepped in to save WikiWatchy's tails. Today, it's Florida's newest state park, and WikiWatchy has the funds to stay afloat.
provides us those resources necessary to maintain what we've had here for the last 66 years. I don't ever like to use the word guarantee, but the odds of it remaining for generations to come are very, very good.
And Floridians are rediscovering the park. Last year, 263,000 nostalgic mermaid gawkers visited. Most of Florida's other historic roadside attractions weren't as lucky as Weeki Wachee. Most are closed. They simply couldn't compete with Orlando's shiny theme parks. But Weeki Wachee, with its roaming peacocks, water slides, clear springs, and of course, those mermaids, keep Florida residents interested. Like these 8-year-old mermaid enthusiasts who visit every year on their birthdays.
Who wants to be a mermaid?
Me, both of us.
For First Business News, I'm Jackie Keenan.
The next historic Florida roadside attraction to become a state park is Silver Springs. The government is working to clean up the algae pollution that's destroying the once crystal clear springs.
Hiring in the travel and tourism sector is making a comeback. The LA Times reports that the industry has recovered 92% of the positions lost during the recession. Economists argue most of the jobs are part-time or minimum wage, such as waiters earning a median salary of $22,000 per year. However, the Travel Association defends the hiring surge, saying it's helping the middle class. The association cites the hiring of salespeople, travel agents, and hotel managers, who it says earn between $27,000 and $80,000 per year.
Still to come, overly animated. Has Hollywood jumped the shark with cartoon characters at the box office? Plus, what our viewers want to know about penny stocks, Facebook's growth potential, and the next rising star stock on Wall Street. Stay with us. A special edition of Traders Unplugged is still ahead. The list is long of animated films at the box office this year. Our movie guy gets into character for today's Movies and Money segment. And Eric, why so much focus on cartoon characters at the box office?
Because they make money, right? Isn't that ultimately the bottom line, is that they make money? And as you remember back in the day, it used to be pretty much the Disney's game. You know, they would release a couple, throughout the year. But now, over the years, studios have developed their own animation division, so everyone's trying to get a little piece of that pie.
But the list is extremely long, you have to admit. This year alone, we counted something like 14 films geared towards families, the younger audiences, starting with Escape from Planet Earth, Oz the Great and Powerful, The Croods, Epic, Monster University, Despicable Me, Turbo, The Smurfs 2, Percy Jackson, Planes, Cloudy with a Chance of Meatballs 2, Freebirds, Frozen, and Walking with the Dinosaurs.
Yeah.
A lot of Fox, a lot of Disney up there.
Yeah, and if you look at those, the key thing to look at those things are that list is the dates. I mean, you look at a movie like The Croods that Fox had back in March. It was the only family game in town for 2 months, and what happened? It became one of the biggest hits of the year. And then you look at the summer, you had Monsters University and Despicable Me 2, kind of challenging for the top spot. But those are both event films, a big Pixar film, a big sequel. And then you got into mid-July, and you had a sort of an onslaught. You had Turbo, you had Smurfs 2, you had Percy Jackson. All these movies competing for the same family dollar. When at that point, moms and dads are saying, kids, go out and play. We already saw your movies this summer.
Is this too much animation, though? As you said, back in the day, if there was a Pixar film coming out, it was a big event.
It was a thing, yeah.
Highly anticipated.
Absolutely. And,
Still that way?
Pixar still is, yeah. I mean, even with the last 3 films, which I think are below quality for Pixar, families are still going out to see them. So obviously that's the one, that people want to go see. But at the same time, they can only go see, I mean, if family films are expensive. Going to the movies is not cheap anymore, especially when you factor in the 3D prices and popcorn and soda and candy and all that.
Which
so
you have to have.
Absolutely. And the kids are going to want to have that too. So you can only go see so many, maybe one a month is a good, opportunity for people to go.
What is the best time to release an animated film, especially when there's an abundance out there?
There are a few periods that, if you look at the history, are the best time. Usually sometime during the spring, usually the month of March. If you get one big movie out there, you get yourself a Rango, a How to Train Your Dragon one that can do very well. I think anytime between Memorial Day and July 4th, I think that's a pretty good breeding ground for animation. Anytime mid-July to Labor Day, not a good time. August is a $100 million animated film, non-existence, never happened. And then I would say in November, usually the first weekend in November and right around Thanksgiving are usually the best times to release them.
Will this trend continue?
Absolutely. How to Train Your Dragon 2 next year, and this year, Cloudy with a Chance of Meatballs, Freebirds, and Frozen, I think are all going to be hits, and they're spaced out nicely. So,
Eric, thank you so much for your thoughts.
Absolutely.
Consider them the script doctors. As films get more expensive to produce, studios have started to bring them in, researchers to assess storylines, evaluate film messages, and conduct audience test screenings. One company called Worldwide Motion Picture Group is in such demand. It charges $20,000 to gauge a film's potential.
Coming up next, it's what you've been waiting for. Our traders go head-to-head over topics from our viewers. And later on in Chart Talk, what the change of seasons means for your portfolio. Stick around. It's a special edition of Traders Unplugged. Alan Nuckman and James O'Malley are standing by to answer your questions. Hello, and here we go with what our viewers want to know. Topic number one, Penny, for your thoughts. Is it a good idea for new investors to invest in penny stocks?
I don't think so because they're not very liquid. Just because they're cheap doesn't mean that you have lower risk. It's not about what you trade, it's how you trade. It's about having a certain small percentage of your account at risk on each and every trade, regardless of the asset class. But they're not liquid, they're not easy to get in and out of, so it can lead to trouble.
I completely agree with Alan. Penny stocks is a very hard game. Commissions are a really big challenge for a retail trader, especially one that's just starting out. And with penny stocks, your commissions are going to represent a very large portion of your initial capital outlay. It's going to be expensive to get in, expensive to get out. Penny stocks is a tough game.
Institutional investors don't trade those either, so that hurts you.
Topic number two, face up or face down. Where do we go from here with Facebook after it actually finally cleared its IPO price this year?
Right, so Facebook clears its IPO price. You might expect some people to run to the exits that have been in the stock for a long time, have been taking pain for a long time. We're not really seeing that happen. However, they're starting to unlock this mobile space. They're starting to gain more revenues from that. I think if they're able to continue to do that, there's a lot of growth potential for Facebook.
That's an epic comeback. If you can look at it technically and not think about it too much, that $20 move off that lows, tack it onto that $38 price, that puts a price objective of 58. There's still a lot of upside, and the Nasdaq's been extremely strong all year long.
Topic number three, priceless. What stock could be the next Priceline or Tesla? Those stocks have been hot this year.
I got it. Soda. The future is water. I know that's silly. People said that 10 years ago, we're going to bottle water and charge more than we do for Coke. But the reality is that the fizzy water, the soda machines are a revolution now. You can make your soda on your own or make that fizzy water on your own. And if you look at the stock, it went from 30 to 80. That's the next new momentum stock.
Right, I actually completely agree with that. I think soda is a great pick, but let's not act like the move in Tesla and Priceline is over with. I think those stocks still have a lot of potential for more upside here. Tesla is a growth stock, can still head higher, and I think SodaStream is a good
and
play
momentum
as well.
stocks, you know them when you see them, so that's what you want to watch for. You don't pay attention to what's going on with the fundamentals. You can see it on the chart. You want to jump on board and take a piece out of that high probability move.
Here's your bonus round question, also coming from our viewer. Name the first business to list on the New York Stock Exchange. Was it a mining company, a bank, or an oil company?
Railroad.
That wasn't one of the choices. Mining.
Oil.
Bank of New York. Thanks so much, guys.
Come on.
And a huge thank you to our viewers. First Business continues right after this. Thanks again. Traders often have to consider seasonal issues when putting on positions. Joining us now is trader Tim Bingham of Trading Block. Good morning to you, Tim. And let's start with the fall season. What does that usually mean to traders as far as the charts?
Yeah, absolutely. Good morning, Ange. And, historically, August, September, kind of the lead into fall has been the worst, period for stocks, actually negative returns historically, but then followed once we kind of hit Halloween by probably the best 2.5 month period, that November, December, early January period, normally the best period for stocks. So as a trader, kind of avoid, getting too long here until after the kids get done with their Halloween costumes.
And why is that? What's motivating the wild moves that do tend to happen in October? Certainly a month that we've seen some historic market crashes.
Yeah, absolutely. A lot of that has to do with a lot of the mutual funds, tax reporting season is around that time. You have a lot of rebalancing there as well. And then, just historically, I think kind of luck of the draw. A couple, if you take out, the crash of 87, not as bad a time period. So that one kind of really bad down day, 22%. Pull that out, is not nearly as bad, but historically I think a lot of the mutual fund end of year stuff has a lot to do with that.
As you're advising some of your clients in trading their portfolios, what do you often find yourself doing during this time period? Are there years where you just sit back, or are there years when you just stay nimble and stay right in the market?
Yeah, absolutely. We're a little more aggressive. We do a lot of option selling against the portfolio. We'll tend to be more aggressive with the call selling to kind of, limit our exposure during that period. Also, if we're looking to add stocks to portfolio, maybe wait towards the end of that period to do so, not jump in as aggressively. So, kind of stay on the sidelines, be a little more tactical, absolutely.
Tim, always a pleasure to have you on the show. Thank you for your time today.
You bet. Thank you, Angie.
That's it for now. As always, feel free to follow us on Facebook and Twitter. You can also send us an email or give us a call. We look forward to hearing from you. From all of us at First Business, thanks so much for watching. We hope you have a great day.